Hello, everybody. We've got some people watching from the East Coast tonight. I see some familiar names. It's 7 p.m. in Los Angeles, California. And good morning, Vietnam. All right. Hello, everybody. We've got Michael on here, of course, our wonderful moderator. And we have all you lovely people. If you're watching from the United States, you know what to do. Let me see a 1. And if you're watching from Vietnam, let me see a 2. In fact, if you're watching from Vietnam tonight, you may just hear a lot of English. And if you're watching from the United States, it's one of those things that you hate. You hate. I haven't met anyone yet who likes taxes. But it's important. We have to deal with it. We have to deal with it. We cannot escape it, although some try. And so it's that time of year. A lot of people, if you haven't already, making appointments to do your taxes. So whether you do it like yourself, with a software, that starts with a TT, or you go to a CPA, or you go to one of those big box stores and they do it for you, you have to do your taxes. Some people already have done their taxes. And then some people, especially if your situation is a little more complex, you just put it off. You just put it off. You hate it, right? So who has already done their taxes? I see Michael's done his taxes. He's already gotten returns. Okay. Very nice. That must feel good, huh? That must feel good. Who is expecting a refund this year? Có ai làm thuế mà mình sẽ được tiền lại không? I can't remember the last time I got a refund. I remember my dad used to do my taxes long time ago. And he was so good. He knew about all the different, tax codes and rules and the different changes every year. And he always got me a refund. It was great. And then one year I had to do it myself because he was in Vietnam. And boy, that was a learning experience. Anyway, so doesn't matter. Doesn't matter how much you hate them. We still got to do them. So we're going to learn about taxes. Okay. A lot of people have not done their taxes, And for those of you who have not, I hope that we're able to kind of just tell you about some changes and go over some deductions that are important. You may want to be able to take advantage of it. Okie dokie. Okay. Here we go. You know what the first thing we're going to do is? The first thing we're going to do is that gosh darn disclaimer. The one that says, this video is for educational purposes only. It is not meant to be taken as specific tax, legal, or investment advice. That would be the disclaimer. Okay. Now let's get to the other stuff. 2022 taxes. 2022 taxes. Can I at least get some kind of a yeah. Sure. I bet you're that excited. Okay. Here are things that you should know. Okie dokie. We're going to talk about things that you would keep in mind as you get ready to file your 2022 taxes. We're going to talk about tax brackets, the standard deduction, itemized deductions, the child tax credits. There's some changes. IRA and 401k contribution limits, HSA accounts, alternative minimum tax exemption. Man, I used to hate that. And estate tax exemption. Okay, everybody, let's get into it. Those gosh darn tax brackets. So There are still 7 tax rates, but the income ranges, or what's known as the tax brackets, have shifted just a little bit to account for inflation. So here's what it looks like for 2022. Okay, we're going to look at single filers. Oh, and those lucky married filing jointly people. Okay, here are the 7 tax brackets. I have gotten very familiar with these now as I help people figure out where they're going to be once they retire. So here are the 7 tax brackets, okay? If you're single, all the way up to 10,275, you're in 10%. And if you're married, that's up to $20,550. Now I'm going to start moving up. 12% from 10,276 to 41,775. Okay, so you're going to see that it shifted a little bit this year to account for, oh, that other wonderful word, inflation. Here's a look at the 22% tax bracket. Okay, a lot of people fall in right here, 22%. Now, if you make a dollar more than those amounts, now you're going up to the 24% tax bracket. If you're married and filing jointly, from 178,151 to 340,100. Okay, so let's take a look. These are 2022 tax brackets. Okay, I know people who are single making very good money right now. I know what it was like to be single back then, right? Paying what seemed like half of your paycheck back to the government. You're welcome. You're welcome. Okay. Standard deductions. When I posted this on Facebook, someone said, I just take the standard deduction. Okay. There are slight changes to the standard deduction. Standard deduction refers to the portion of income that's not subject to tax that can be used to reduce your tax bill. Okay, so the IRS allows you to take the standard deduction if you don't itemize your deductions. And when you do that, you have to use that wonderful Schedule A of Form 1040. Okay? So they adjusted it each year for inflation, and this is what it looks like after the inflation adjustment. So for 2022, standard deduction for single and married filing separately, the standard deduction is $12,950. It for single head of household, it goes to $19,400. No, these are generally unmarried people with 1 or more dependents. And then for married couples filing jointly, the standard deduction rises to $25,900. Okay? All right. Now is the fun stuff. Those itemized deductions. Okay, most people take the standard deduction. But if you have enough tax deductible expenses, it might be better for you to go with the itemized deductions. Now, they haven't changed much from last year, but here's a look at the rules for itemized deductions and things that you should keep in mind, okay? These deductions. There are state and local taxes. The deduction for state and local income taxes, okay? Property taxes, real estate taxes, capped at $10,000. Then you've got mortgage interest deduction, right? A lot of people like this is the deduction that normally goes away once you get up there to retirement age. So a lot of people use this deduction. The mortgage interest or interest deduction limited to $750,000 of, this is a super fun word, hold on for it, indebtedness. Indebtedness. Fancy schmancy word. 'Cause you owe money. You owe money. But people who had, a million or more of home mortgage debt before December 16th, 2017 will still be able to deduct the interest on that loan. Okay. And if right now this sounds too complicated for you, someone should be helping you with your taxes. Medical deductions, only medical expenses that exceed 7.5% of adjusted gross income or AGI can be deducted in 2022. Okay. Then you've got charitable donations. Charitable donations. They're not as generous as they were in 2021. In 2022, the annual income tax deduction limits for gifts to public charities are 30% of AGI. What's AGI again? Oh, yeah, adjusted gross income for contributions of non cash assets if held for more than a year. But a lot of people give cash donations, right? For cash donations, it's 60% of AGI for contributions of cash. Again, if this sounds a little too complicated, someone else should be helping you with your taxes. What about miscellaneous deductions? Anybody? Miscellaneous deductions. Yeah, no. No miscellaneous deductions. No miscellaneous itemized deductions are allowed. Okie dokie. Tax credit, the child tax credit. I had someone ask me about this actually in, I don't recall if it was an email. I think it was an email. Yeah, she was doing her taxes and she really needed to know. And I'm glad she asked because there are changes. There are changes. Tax credits reduce the tax that you owe dollar for dollar. So they're normally better than tax deductions, which reduce like how much of your income is subject to tax. Okay. In 2021, the American Rescue Plan Act temporarily enlarged the child tax credit. Okay. And so that meant in 2021, taxpayers with children ages 6 to 17 could get a credit of up to $3,000. Now, for children under 6, that amount jumped to $3,600. Good, because those little boogers are expensive, man. However, for 2022, that amount has reverted, gone back to $2,000 per child dependent, 16 and younger. Last year, and when I say last year, I mean when you were filing last year for 2021, the tax credit was also fully refundable, which means that if the tax credit, if the credit amount that a taxpayer qualified for exceeded the amount of taxes they owed, they could get the difference back. They'd get some money back. There was also no minimum amount of income that you needed to earn to get the refund. Well, guess what? They changed it. They changed it. In 2022, the tax credit will only be refundable up to $1,500, depending on your income. And you must have earned income of at least $2,500 to even be eligible for the refund. You kids are expensive. You kids are so expensive. That's why you better, gosh darn it, listen to what we say. Also, the income thresholds for phasing out the credit will be higher. Okay? Okay. IRA and 401k. There are a lot of changes when it comes to IRA and 401k contributions and RMDs, required minimum distributions. I already did a separate video on this, so So please go back in the videos to take a look. That was the Secure Act 2.0. Lots of changes. Lots of changes. Why? Americans are not prepared for retirement. So now the government is trying to fix the retirement system that we have because it's not working. So make sure you catch that video. Secure Act 2.0 changes. All right. Okie dokie then. Let's go on. HSA account. You can save a little bit more money in your HSA account or your health savings account. Okay. For 2022, the maximum you can contribute to an HSA is $3,650 for an individual. That's actually up $50 from tax year 2021. And $7,300 for a family. That went up $100. People age 55 and older can contribute an extra $1,000 catch-up contribution. Not ketchup and mustard, catch-up contribution. To be eligible for an HSA, you have to be enrolled in a high deductible health plan. Okay. Ooh. Okay. Changes to the alternative minimum tax. AMT. An alternative minimum tax places a floor on the percentage of taxes that a filer must pay to the government, no matter how many deductions or credits that filer may claim. I remember the first year I got hit with alternative minimum tax. I said, "What?" Yes. Yep. Is we all gotta pay it. Mm-mm-mm. Didn't matter. Didn't matter how many deductions you had. Okay. Can you see this? Can you even see this? Okay. Let's see. Okay. I hope you're still able to see this. I hope you're not so old that you're not able to see this. Can you see it? The United States currently has an alternative minimum tax for taxpayers who earn above certain income thresholds. And for 2022, these thresholds are higher. Well, that's good news. That's good news. So there they are. If you're single, it's 75,900. Mama can't see right now. Mama can't see. Um, okay, you're just gonna have to look at that. My eyes are shot. My eyes. Do you get a deduction for bad eyesight as you get older? You should. You should. Okie dokie. Estate and gift tax. As you get older, this will become more important to you. And the changes in estate and gift tax, you have to pay attention to it because as you're thinking about what you're leaving back to your children, okay? You know, when we're talking about life insurance and you've got, estate plans, you've got living trusts, you've got all this stuff. You need to think about this because there are taxes to be owed and there are ways to avoid those taxes if you know what you're doing. You know what I mean? Okie dokie. Here we go. The total amount that a U.S. citizen or resident can transfer to another individual that's free of estate, gift, or generation skipping transfer taxes. Okay, so collectively we just call them transfer taxes, has been set at a base amount, which is subject to an annual adjustment for inflation. So for 2022, it's been raised to $12,060,000. Amounts above that currently taxed at 40%. Then there's the gift tax. The gift tax annual exclusion allows taxpayers to make certain gifts without eroding the taxpayer's lifetime exemption amount. Okay, the gift tax annual exclusion in 2022 will increase to 16,000 per donee. Okay, if you want to give your child a gift, you're able to do it. 16,000. Whoa. Here's what's excluded from that. So, all gifts to your spouse, if your spouse is a US citizen, all gifts to your spouse are tax-free. Well, that's good news, especially in areas like 90210. Okay, I digress. Tuition payments that are made directly to the educational institution, medical expenses, including medical insurances paid directly to the provider. So all of those things are exempt, okay, exempt from the gift tax. Wow, we went through those so fast. Okay, so those are the itemized deductions that you should be thinking about, right, to try to lower your tax bill. And the good news is the standard deduction got a little bit of a lift for 2022. Okay. Now, I should remind you, since we're talking about taxes, that there are ways that you can limit your lifetime tax liability. So, again, I'm having many conversations with people who max out their 401k. Today, I spoke to a woman whose employer matches 3%, and she's contributing 20%. She wants to retire early, doesn't have much in her savings account, and thinks that she will be able to rely on Social Security, which by the time I believe she's 67 is only going to be 1,800 a month. And so I reminded her that 1,800 a month really is not the full amount she's going to be taking home. So it's no fun to think about, but it's important. So right now, leading up to tax day, as much as you're going to hate it, you're like, oh. Now there are families who are getting refunds. Okay. So especially if you're getting refunds, take a look at your situation. Should you really be maxing out your 401k, especially when the employer doesn't match it, so that you can maybe end up paying more down the road? Let's sit down and figure that out. Because if that looks to be the case, why would you do it? Why? You wouldn't. You wouldn't, right? If you actually sat down to figure it out, because every family is different, the better strategy may be to only contribute what the employer matches. Pay your gosh darn taxes now. Take that money, put it into a vehicle that will grow tax deferred, and you'll be able to take the money later in life tax free. Like, doesn't that sound like a better deal? It does to me. It does to me. And it's actually quite easy. So in case anyone else is thinking about this, I just want to share some stories that I've been hearing. People who want to retire early, didn't really plan. They have like a little bit in their 401k. I've talked to people who like just recently started maxing out their 401k, but their income is, their income level's relatively low. So it's well under 100,000. They're maxing out their 401k, but they just started doing that because they want to retire in 5 years. I don't know. That's really late planning. So one of the things that you can do is you can get into a vehicle where you don't have to pay taxes on the growth and on the income you take out of it down the road. It is like a Roth on steroids, okay? A Roth on steroids. Because some people get it, and you know what they're doing now? They're looking at Roth conversions, right? Như vậy là tống tiền vào cái 401k, and now they don't wanna pay, they don't wanna wait and pay taxes later. They're like, "Oh, wait a second, tax-free is a much better way to go." So you know what? They wanna take it out and do a Roth conversion. Now, let's take a look about what that means. That means you have to pay taxes on it now. You have to pay taxes on it now. No other way around it. So again, they're gonna put it into a Roth, and depending on your age, if you're younger, you have to remember you cannot touch that money without penalty until later, right? So if your plan is to retire early, that's not really the way to go, is it? In addition to that, everyone working right now, if you have life insurance with your employer, I already know the answer, but you should ask them. What happens when you stop working for them? Either you retire if you're lucky enough to keep a job until you decide when you go. If you get fired, if you get laid off, right? If you resign, if you retire, what happens to that life insurance? Well, most of the time it just goes away. Goes away. I know that because it happened to me. Lina làm cho đài truyền hình, okay, mấy chục năm. Good plan. Mình còn trả tiền thêm vô nữa. And then khi mà mình retire đó, mình hỏi nó về life insurance. You either give it up or you can continue the plan, but the premiums are crazy high. So find that out before you get close to retirement. Before you get close to retirement, yeah? And if you don't have your own personal life insurance, I know you may hate the word, you may hate the concept. It's because you don't understand today's products. A lot of people, long time ago, had the right idea. They knew that life insurance was probably something they should get. Nhưng mà they got into a policy that really wasn't structured well for them. And life insurance, you should be looking at it. Every 3 years might be too much for some people, but I bet so many of you bought life insurance and then never looked at it again. You have to look at it. Especially if you bought it when you were younger, you ended up getting married, you ended up having kids, okay? You ended up with life changes, like either a job loss or now you make more money. So you have to revisit it. And there are products today with my reputation on the line, if structured correctly, not only gives you a death protection for your family should something happen to you, give you money should you get sick, okay? Pay that chronic illness pay. Meaning, let's say you have a stroke or a heart attack, right? And you can no longer do things for yourself. And you need someone to help you. If your spouse can't quit their job and help you at home, and even if that happens, what about their income? You know, I need to remind people that if something happens to you or your spouse, and one of you has to quit your job to stay home and take care of them, you know what you can do? You could take payment from your life insurance company and pay your spouse to care for you. So, those things a Roth does not have. Also, no age requirements. You don't have to be at least 59 and a half. There are no penalties if you needed the money before that. So give yourself a better chance at a better retirement by planning. Planning today. Okay? Planning tomorrow. Get in touch with me. We'll schedule it. But every single day that you go without paying attention to it, you're putting your family at risk and you're losing money. That your cost of insurance will go up every year. It's the way it works. The older you are, the more expensive it is to insure you. So even if you're very healthy, nhưng mà you're older, it's going to be more expensive. But you know what's even more expensive than that? Getting sick or dying without any life insurance. Because then you have to pull everything out from your 401k, from your Roth, from your savings account, from under your mattress. Today I talked to a lady who this is the first time I heard it, actually. I bet you it happens more in Yuma. This is the first time someone told me. So we're figuring out her finances, and I said, "Oh, so you should have this much extra every month. Where's all this money going?" And she says, "Oh, trong nhà bang." And I said, "Oh, how much do you have in your bank?" And the amount kind of didn't match what she should be saving. And I said, "Wait a second. Like, what happened to all the money?" And she said, she went and bought gold. And I said, "Can you estimate how much you have?" And so we were like trying to figure out gold bars and how much she has and how much it's worth. And so that was very, very funny. And her plan was to later save all this money and go in on real estate with friends. Cả hết với nhau. Yeah. Chung tiền và mua real estate để invest. And so I said to her, "Well, what if you get sick or your husband gets sick, like really sick, and you need money? Are your friends going to be okay that you sell that real estate so that you can have some money to take care of the husband?" And of course, she knows the answer. So if you have plans for real estate, and I think real estate is great, we invest in real estate. And we have plans to invest in more real estate, but we also have the type of investment that is truly, truly passive. So when you think of mình sẽ mua nhà để cho người ta mướn for income, cái đó không có passive đâu. Okay, cái đó là it requires a lot of work, quý vị ơi. Lina biết, I'm selling a place right now. Even though là nó rất là very good rental. Nhưng mà when the pilot light on the water heater goes out and they call me, I'm like, really? I once had a nice house that I was leasing. And it leased for a very good price. It was like $6,500 a month for leasing the home. And when the battery on the smoke alarm started beeping because it was low, can you believe this man contacted me because he didn't know what to do. So to be a landlord actually requires a lot of work. It's not passive. So think about the kind of real estate investing you want to do. Back to taking care of yourself and your family. If you are and I say bad only because there are better policies. If you are in a bad a bad policy right now where, and I've seen it, I see it every day of every week. The money that you put in 20 years later, you've only gained $1,500. Like, it breaks my heart. And then you think that you can stop paying and continue to have life insurance for the rest of your life? Not going to happen. It's not going to happen. If you've been paying minimum, if you feel like, oh, I got a great life insurance policy, I only pay $80 a month. Please take a look at it. If you don't understand it, I'll look at it for you and I will explain what these things mean. Okay? So don't ignore that. That is such an incredible vehicle for retirement. You're going to protect yourself. You're going to protect your family. You're going to earn tax-free income. If you get sick, mình lấy tiền bảo hiểm, nó đền cho mình xài. Tại sao? Why would you risk your hard-earned money, okay, your money in your savings account, hoặc là even your money in the 401k? Because you know what happens? If you take that money out before it's time, you get a penalty. And when you take it out, you have to pay taxes on it. You have to pay taxes on it. A lot of people clearly don't understand how taxes work because they still ask me, well, how do we get around that? You cannot get around it. There is no way around it. If you contribute to your 401k and it's pre-tax dollars, you must pay tax. You must pay taxes on it. And if you're too young to be taking it out now, okay, if you're too young, you don't want to take it out because then you have to pay a penalty too. Then really all you can do is think about what else can you do with your salary money, okay, your income. Maybe the better move is to collect your income, collect your paycheck, pay your income taxes now. Take that money, put it into an IUL. Okay? Earn market-like returns. Be protected with a 0% floor. So when the market crashes like it did last year, you know how many people said that to me? Oh my gosh. Mất 20% is probably little compared to what I've been hearing. 30, 40% last year. And each time I spell it out of how long that's going to take for them to recover, they're shocked. They're shocked. So, quý vị ơi, I hate math, even though I'm very good at it. I was on the math team. Lúc đi học trung học đó, in high school, like my parents were so strict. They did not allow me to do cheerleading, and I did dance, but only at school. I couldn't do after school. One thing they did let me do was join the math team. I actually lettered in math. So I was good at it, but I didn't like it. And up until pretty recently, I still hated it. Cái gì chứ numbers and, taxes and math and trying to figure out finances, I used to hate it. But now that I get it, now that I see the opportunities, now that I can see, oh my gosh, what you can do with it. Mà cái này không có ai lo cho mình đâu nha. You have to make the decision. No one's going to do it for you. I can help you, but you still have to make the decision. Okay? Now it's so exciting to me. Now it's look, I have 'em all over the place. I love calculators now. Um, so this is something for sure quý vị làm được. Okay? Mình có ít, mình làm ít. Ai mà có chút tiền ha. It is not too late. And if you're a little bit older, I talk to people every single week. They are in their 50s. They've not really done any retirement planning. And so we look at different ways to do it. And one of the best ways is with an IUL because they can afford it. And when they see what's going to happen down the road, what do you think they want to do? They want to get online, go into their 401k, change their contributions only to what the company matches. They're going to take that money, they're going to put it in here. Right away, they've got a death benefit that is much higher than the lousy $200,000 benefit that the work policy gives them. Now they have a death benefit that's like $800,000. So that if something happens to them tomorrow, if they were in the policy today, their family gets paid $800,000. So if you want to take, like, if you want to look at really taking care of your family, that's taking care of your family. Còn như nếu mà mình không có cái đó, then let's say something happens to you and you die, your 401k money, taxes must be paid first. Nợ nần ở đâu mình phải trả cái đó trước nè, trả thuế nè. And then the money comes to the family. And I don't know, do you think you'll have $800,000 in there now? And if you do, that's a big tax bill. So those are the things that you can be doing right now. Those are the things that you can be doing. It is so exciting, quý vị ơi, khi mà quý vị ngồi xuống, mình tính ra, this is my take home pay. This is what I'm paying for my house, my car, my utilities, my groceries. I ask them about everything. Everything. Because I want to figure it out. I want a real number. I don't want it to be difficult for your family. I want it to be real numbers so that I can design a plan that's great for your family. And at the end of it, I can't tell you, people are so appreciative. And many of them say, trời ơi, cái này mà tôi biết trước đây á. I said, I know. Nhưng mà we can't look back, right? We can't go backwards. Nhưng mà now that you know about it, if you don't do anything, 5 years down the road, 10 years down the road, and then you think back and you say, man, if I knew, but you did know. You did know. And at that point, it will be your fault. Yeah? If you didn't know about it, that's different. But now you know. There is a way. Okay? I don't care what your friends are doing. In fact, I have people whose friends now are calling me. Okay? Sometimes I talk to wives, and at first the husband không có chịu nghe. For whatever reason, there are just a lot of men who I don't understand it. I don't understand it. If you love your wife, if you love your children, why would you not have life insurance? Because if you have a heart attack tomorrow, if you die in a car crash tomorrow, what's going to happen to your wife and kids? You must have, this is the ultimate backup plan. You must have something. Okay? Còn không đó, if you are just counting on your work life insurance, you must die while you are working there. And if you would like to retire early, well, then that's not part of the plan is to die while you're working, right? So let's do it. And Today, I talked to a woman and I looked at her plan. She has 3 or 4 in her family, and one of them is structured correctly. So I told her, "This one is good. This one you keep. This one, you better call them up." Here's the other thing. Don't take my word for it. I'm going to tell you what to ask them. And I want you to call them up and I want you to ask them. I want you to hear from the company what is going to happen to your policy. Okay. So I'm happy to look at what you have. I'm happy to help you understand it. So now it is your fault if you don't do something about it. Nhá. Hồi trước mình không biết là khác. Mà hồi xưa đó, okay? 20 years ago, this really wasn't something that we could design for you. Today's products are different. Yeah. Just like, Social Security was supposed to take care of us when we got older. You can't just count on Social Security anymore. 401k was also supposed to help you defer taxes. And now for a lot of people I talk to, maxing out their 401k is a bad plan because they're actually going to make more money down the road. So let's figure it out. Let's get you in a better situation. Okie dokie. Dennis Douglas, you said prop manager. You know what's really funny? For a moment when you said that, I thought, do I know this guy? Because guess what? The guy who was renting my house, who was leasing my house, was in the entertainment business. And I was amazed. I was like, all you have to do is change the battery. And he's like, oh, okay. Well, when can you do that? Okay. Had to remind myself. So, yeah. So I'm currently selling one property and looking to, buy other things. By the way, some people ask me, can you have more than one life insurance policy? Of course you can. Of course you can. And in fact, because of the investment vehicle within some of these life insurance policies, it's a good plan to. See, it's a good plan to. Property manager. You're talking about a property manager. Yeah. It was just one house. It wasn't like an apartment building or something. So that's the other thing. If you're going to buy a house for rental income as you're getting older and you don't want to deal with being a landlord, you would have to hire a property manager. So now it's more money out. The money that you had come in, now you got to give some out. So make sure your plan is a good one. Okay? I know in the past few days, sometimes my conversations, sometimes they're very funny. Sometimes I sit there and I cry with people. I am not kidding you. Like someone now, I don't know if there's anyone watching now who's talked to me before. I have had, I've had two people in my office, physically in my office, crying. And I've had maybe 3 or 4 people on a Zoom crying with me. So, so take control. Okay. What is the good life insurance company in the market now? Okay. One that depends on what kind of insurance you're looking for. And I'm not going to use my YouTube channel to do any marketing for any insurance company. Okay. So it depends on the product. There are certain companies that are great with one product. There are certain companies that are great with another product. Like there's term insurance, there's whole life, there's universal, there's index, IUL, index universal life. Okay. And I'm not a captive agent, meaning I don't work for just one company, because if I did, I could only give you those products. What do we call that, everyone? What do we call that? I should just I should just buy a hammer, and I should just keep a hammer right here so I can remind you. That's called hammer and nail. I am not a hammer, and you are not all nails. Some of you are a little screwy, if you ask me. So that's why I'm able to look at all the different companies and see what's best for you. If you're going to a place that only sells that company's products, then that's all you're going to get. That's all you're going to get. And then you have to do the work, and you've got to call all the other insurance companies and see if their rates are any better. Then you have to sit down and do the homework and compare their benefits and their costs and their structure, right? So we're able to do that for you and show you. Okie dokie. Screwy. Yes. Did everyone understand that joke? Did everyone understand that joke? Hammer, nail, screwy. Anyway. Okie dokie. So there is the website on the screen, lenawin.net. Okay. Get in contact with me, and I'm happy to look at what you have and tell you what I think. And there are a couple of people who are already in good hands. You're on the right track. I love it when I can tell someone you're doing great. You're on the right track. Unfortunately, most people are not. Most people are not. And in actuality, most of you watching right now, if you continue to do what you're doing right now, you will not have enough money in retirement. So I don't know if changes have to be made or if things need to be added to your plan. So let's take a look at it. Okie dokie. All right. Yes, indeed, everybody. Hit the like button. Hit the like button for me. That would be awesome. Tell your friends about us. Don't be greedy. Come on now. Don't be greedy. Uh, should we play around with some buttons and see what we see? Does that remind you of a commercial? Does that remind you of a commercial? Jay, you're late and you're fired. Hi, Lena. I just found your link. Is today's topic about life insurance? The title seems to suggest tax filing season. So when this video posts, go back to the beginning. We went through itemized deductions, tax brackets, standard deductions, child tax credit, estate tax, gift tax, alternative minimum tax, HSA. We covered a lot about taxes. By the way, life insurance, what does that have to do with taxes? Oh, everything. So if you missed that part too, that's the important part. Because after we talk about taxes, right? After we talk about taxes, people are like, gosh darn it, I hate paying taxes. Actually, there was one weirdo the other day who said, I love paying taxes. It makes me feel like I'm doing the right thing. Okay. But we have to pay them. We have to pay them. So we don't want you to do anything illegal. But there are legal ways that you can avoid paying income tax. Oh, yes, there are. So all the people with all the money who aren't paying all the taxes, it's because they know all the rules, right? They know what tax codes to use to avoid paying taxes. So it's all legit. One handsome gentleman the other day said to me, was younger than me. He said, just like you said, Jay, it sounds too good to be true. I said, I know. And I am telling you, it is legit. It is legal. I would not risk my reputation or freedom telling you about something that isn't legal or doesn't exist. I didn't retire early to go to prison. Okay? So, Jay, I hope you get a chance to go back and listen. Um, and the wonderful thing is, today I talked to the president of a very large company, um, because he sees that the things that I'm doing, and I was talking to him, and I said, and he said, "So, who are you helping? What is the age range?" And I said, "Youngest person is 2 months, oldest person is 75." And he started laughing. I said, "Yeah, I know. Like, how amazing is it that I can help someone as young as 2 months old and as someone as old as 75 by getting them into a plan that's really gonna benefit them." I mean, that's amazing, right? Right. Um, what else? Oh, I don't know if I should. Okay, so you guys know I'm super duper duper busy, right? Um, and I love it. I need help. I know this. And we are now looking at bringing on people who like only awesome people, please. Only awesome people need apply. And they have to be the right people. I don't want salesmen. I don't want salespeople. Although, I mean, clearly it's part of the job. You must know what you're talking about. But I need people who want to help people. And so I've got a couple of good candidates. And one of them told me that she was talking to someone else about something similar, and he had asked her for her social security number. And I'm like, "Oh, please be careful. Please be careful what you're doing out there, people. Yeah? There must be a completely legitimate reason someone's asking you for your social security number. So make sure if you're giving it out, there's a very good reason for it." My husband has been in financing for, oh gosh, is he old enough to have been in it 30 years? 20 something years. And no one on the business end of it has ever asked him for his social security number. Okie dokie, okie dokie. Holly, I'm tired of paying taxes because, oh, it's just a government worker. I also pay city taxes on top of everything else. Really? I know. Here's the cool thing. Holly and I talked not too long ago, and I was able to get her something much better than she has right now. So, so Holly, I hope you remember me when like you start collecting that tax-free income, and that you're going to send me a bowl of pho by then. And guess what? By then, a bowl of pho is probably going to cost us $100, but you'll be able to afford it. Okie dokie. Let's go back to these sound effects, shall we? So, there's that plumber commercial, like no crack, no Bubba smelling bad. Oh, you smell pleasant. That's what that reminds me of. What was that? Hmm. Hmm. Very good. Really? Oh, stop it. No, really, stop it. Stop it. Okay, funny. Hmm. Mm-hmm. Mm. Give yourselves a hand for coming tonight. Very good. Okay. And then the other button I pushed when we first started this, so I'm not going to push that one today. Isn't that fun? Isn't that fun? Michael says, I was talking to a friend about you and Denny last night. I mentioned how much helping others is in yours and his nature. We're both not raised that way. We were both not raised that way. We both agreed that you two are on something. But thank you. Thank you. Will I be getting into tax preparation eventually? No. No. In fact, I'm looking for someone who's very good. I have a tax strategist, so it's complicated and it's a lot more than most people need. But people are always asking me for a good recommendation. And I'm still like looking for good tax people, good estate attorneys, people who do living trusts that I can depend on. Oh, please don't get me started. It is hard to find someone good, you guys. Like, customer service is so dead these days. Like, it's amazing. Like, I have hundreds of people who are always asking me for recommendations. They need estate planning, they need a living trust, they need someone to do their taxes. And I don't really have anyone to refer them to. It's really disappointing. When we're finding a tax person, doesn't have to be guy, we met with so many, and the level of customer service out there is so poor. Really, we should run the world, because if we ran the world, you wouldn't be complaining about customer service. Customer service is so dead these days, right? Yeah, I know, Holly. I'm still finding someone because I know how important recommendations are. So when I recommend someone, I want to know that, one, they're a trustworthy person. Two, they're going to provide the kind of customer service that I would provide. Three, they're going to do what's best for my friend. So it's hard for me to really find someone who fits all of that, which, by the way, is why I'm helping people with the retirement plans. And I think I might have told this story once. I had once interviewed someone. So this person and I had no business nothing. I just interviewed that person. And someone listening went to this person for help with the same stuff that we're talking about right now. I didn't know about it. No one told me until years later. And she did not do what's in his best interest. And like, even though I didn't introduce them or anything, and I didn't refer her or anything, I felt responsible. I felt so awful because he's a nice man. And now years have gone by and he has lost out on a good opportunity to do what's right for himself in retirement and his son. And so that's why now I am doing this personally, because I cannot, in good conscience, just refer you to someone else when I don't know how they work. So I'm just one of those people. I feel responsible for everything. And I don't want to refer you to someone unless I'm pretty sure that they're going to do the best job possible for you. So if any of you know anyone who's a great CPA, or anyone who is a great estate attorney, okay, an attorney who does estate planning and living trusts, we are in bad need of one. Okie dokie. Sắp tới, hai cô Tina, sắp tới cô có dự định làm video về conversation không cô? Có chứ. Đã làm rồi nữa. I've done it before. You need to go back and look at my videos. Okay. Look, I'm 4 minutes over. I'm 4 minutes over. I'm going to charge myself. I'm going to charge myself money each time I go over. Okay, here comes the music, y'all. Remember, lenawin.net/money if you need any kind of help, okay? And please, 1, be patient. 2, I got some help, so I'm pretty good at getting right back to you. Please read your emails. So read your emails. A lot of people don't read their emails. Gather your information. Speak the truth. Be honest. Don't be shy. I can't help you if you're not honest. I can't help you. Okay? Like if you go to the doctor and you're too embarrassed to tell him that, oh, forget it. This is not the right audience. Forget it. Forget about it. Thank you for watching, everyone. You guys are great. I love you. And if you need help, I'm here. Okay. Thanks so much, everybody. Chị Minh Châu. I got the best. I have the best. Okay? I've got the best people. This is true. This is true. Okay, everyone. You're amazing. I hope it's because I attract good people. Because my audience is pretty freaking amazing. Mwah. Bye, everyone. See you next time. Thursday. English lesson. All right. Bye.